So hey everybody, today we'll be talking indicators. We'll have this video and another video talking about indicators, and these will be the only indicators that I would recommend using because they are actually of value and they will allow you to basically um, recognize where is the consensus price, where is the point of control, where is some kind of areas that you should be aware of, um, and if there is actual people trading behind the moves that you see on the chart or not, basically. So here I chose TradingView as a platform for the sake of simplicity, and it's easy to visualize as well with different colors, etc. Because I've been using MT5 for a while now since the start of this bootcamp, right? So I'll be talking about two indicators today: volume profile and 24 hours volume. So that's basically volume here, right? So the purpose of the volume that you see down here, this will tell you if there is a lot of people, there is a high volume traded behind each moves of the market. So for example, if you see a very low volume here compared to other volumes, you see that this push to the downside might be uh, an absence of trading, right? Because there's a very low volume behind this move. However, last Friday we had an FOMC speech, a speech of Jerome Powell, and you see here that we had a high volume, meaning there are a lot of people trading behind this move. Same comes to this push to the downside for the simple reason that yesterday was Monday, so the volume kept rising while the price kept pushing to the downside, and you see this going down. So it's a pretty straightforward indicator in terms of recognizing if a move has purpose or if it's just a slip of the price. Okay, of course it should come with all your own analysis, and you should just use this indicator as a complementary indicator, as a help, right? And then you have the volume profile. Okay, so the volume profile will simply tell you where is the point of control, and the point of control is the highest traded price. Okay, now I think I previously talked about liquidity. So liquidity is basically when there are a lot of people in demand of a certain price, and this asset will be traded around a certain range of price, just like here, for example, that you see. That's a range starting here and in here, but it's still hovering around this median price of 1.16559, right? You see this here. So that's the point of control. So around this price, you'll see the price hovering around, right? And if new information comes within the market and you see the price, for example, breaching to the upside or breaching to the downside, you might go with that move, as this is a very high resistance level in terms of, okay, people are happy with it, buyers and sellers, market participants in general are happy with that price because this is the highest traded price and there's a lot of liquidity, so there's a lot of this asset that is traded at that particular price. This is why the price keeps hovering around here, so there's no particular opportunity for you to trade. However, when there's illiquidity or new information in the market and the fair value of the price, so of the asset, or the point of control or the consensus price change because of this new information within the market, you'll see the price pushing to the upside, pushing to the downside, breaching, trying to seek another fair value, another price that will be good for both buyers and sellers within that market, for all the market makers, the market participants, the dealers, etc., right? So when you see this, this is very helpful because it tells you, hey, you have from the current candle to the first candle where the measurement is made, that's like 200 candles. You have that measurement of all the volumes of the prices where the prices was the most traded. And this is very important because it tells you where are people interested to buy and sell, basically. But these are not like you, they're not traders, right? So you're not looking for what people like, you're looking for what people dislike. And this is very different. So when you combine volume profile and you combine 24-hour volume, you have a powerful dynamic that tells you, hey, if for example you have a breach of the consensus price of the point of control with high volume, you may ask yourself, is the fair value of that asset changing? Can I take advantage of that move? Will that move continue? Until where it will not go, where it will go, so you know where you put your stop loss, where you put your take profit, and everybody's happy, and you take a trade and you're a winner, right? I make it look easy, I make it sound easy. It's a bit more complicated than that because you'll never have a 100% win rate with that, but this will absolutely help you as much as it can because it will give you um, the confirmation that, hey, people are trading at this price, people like this particular price, there is a purpose behind this move. And for example, here on top of that, you see Fed Chair Powell's speech that made the price move. So you wouldn't even need to look at the 24-hour volume, right? But this gives you a confirmation that this move has a certain purpose. Now, it didn't sustain a lot, and you see that price crashing back down with volume as well, not as high as this one, but with volume as well here. And here we see high volume behind these rejections, and this pushes to the upside. So you might expect the price to continue going up because at the same time it's at a bottom, right? Um, and here you see the consensus price. You can even use that point of control of the volume profile as a mean for a mean reversion strategy. So when the price goes too far to the upside, you might expect it to go back to a mean of the price. Okay? And if it goes too low to the downside, you may expect it to come back up. So you might use these indicators that are very helpful in different type of strategies, but these will allow you to basically understand the dynamic of the price, as this is the whole point of trading, is understand what's embedded in the price, why the price is moving, where are the orders placed, what is the order book saying, is there liquidity within the market, is there illiquidity within the market, where is the price heading, is there news coming, will the fair value of the asset change? And these indicators will basically allow you to confirm, okay, there is purpose behind this move. Then you can look for where did it come from, and here the volume profile will basically allow you to confirm, okay, this is a consensus price, and then you'll just add onto that your own areas that you consider as supply and demand, and this will be a perfect dynamic, right? So as you see here, I had a supply area up here, and down there I had the demand area, and in the middle of that, which I didn't expect, but this is how it is, in the middle of that I have the point of control, right? So this is a pretty good dynamic. When you actually know what you're doing, you see that everything aligns and you can take advantage of things. So I'll see you on the next video, and we'll talk about correlation.